Good morning. Welcome to Market Monday for September 30th, 2024. And we're now in the final quarter of the year. We've got fall weather, we've got football, a little something for everyone. Indeed, we've got the stock market rising like a soft landing has happened. Gold is rising and up almost 30% so far this year to an all-time high, like we're in an economic crisis. Bonds are actually falling in value like the Fed is done cutting rates. Real estate prices are rising again like rate cuts just started. Oil prices are falling like demand is disappearing. Unemployment is rising at a time when jobs are seemingly harder to get, but GDP is still robust. Call me confused. A little something for everyone. Clearly, we're in an environment where crosswinds are blowing. In our human nature to categorize and label things, it gives us comfort to clearly define things as bull or bear. Reality is, often it's somewhere in between. There's always risk we must bear as investors. Perhaps a better way of looking at the current environment is something like this. A client sent this in to us. This creature is called the Ursitorox, a mythical combination between bull and bear. But don't we always talk about context here at Market Monday? Whether the Fed is hiking or cutting, aren't there hundreds, even thousands of other variables at work? Isn't it always a little different each time? Here we see, going back to 1968, the Fed usually cuts rates at or near peak inflation. See that? Look what's happened this time. The Fed waited till the inflation dragon was tamed before beginning to cut rates this time. A little different. Here we see that unemployment figure rising in blue and a consumer confidence survey which asks, are jobs hard to get or are they plentiful? When it's rising, it's a weaker unemployment situation, and at least in the past, has been fairly accurate. But a quick word on consumer surveys. The last survey was specific to jobs, but when the broader consumer confidence surveys are published, we should view them with a grain of salt. This survey is broken down by political party. See what happened to consumer confidence among Republicans when Trump was inaugurated? How about when Biden was inaugurated? So much for logical, rational, objective humans. Going back to unemployment, it appears the Fed has historically changed policy, not just on inflation, as we just saw, but also on unemployment. This line is the unemployment rate going back to 1970, so higher unemployment when lines going up. Green dots are cuts, red are hikes. So the Fed is often hiking when unemployment is bottoming and cutting as the unemployment rate is rising. This time seems to be right in line with past Fed behavior. And today we'll leave you with so much for that end of September swoon. The last 2 weeks of September actually were up this year, which makes about as much sense as everything else that's been going on this year. But let's not rest on our laurels as we're entering election silly season with a market that's getting pretty elevated. Have a great week.